Ladies and gentlemen, welcome to the MFSA's digital contact session where we are going to discuss compliance, legislation and regulation. We foresee that the session is going to take between 1.5 to 2 hours, and we really look forward to presenting to you. Our sponsors for the sessions and for all of our sessions that has been really supporting the association is ACPAS, ALPS, BidMe, Experian, Kepler, QuinPay, Micromax, NewPay, Delta, SureCard, Sure Systems, TransUnion, and Universal Insurance. And we really want to thank all of our sponsors for their support. Without them, this would definitely have not been possible. We really look forward to the day. We've got a couple of announcements to make. What we want to tell you is that we've got a digital compliance session that is only for members on the 18th of November, and we will be focusing on debt counseling. So make sure that you and your staff do attend that session. So we've got the digital contact sessions that is for everyone, members and non-members, and then we have our digital compliance sessions, which is only for members. There we give you guidelines on exactly what to do when you deal with certain compliance issues. We also upload templates and information for our members. Then we have our digital expo on the 2nd of December. Now, this is something that is very new to the association. This is where we will introduce a couple of current service providers to you and their new products, and also new service providers and new products. We really want you to join the digital expo, and everyone is welcome there. This is something new for us. It's interesting, and we are looking forward to actually bring the action for 2022. We want to equip you to be compliant, to see what the service providers are offering, and also to see, what 2022 may hold for your business. We always want to make it better for our members, and we really look forward to 2022. In 2022, this is the dates for our compliance sessions. So that you can at least put them in your diary. We've got one for the 17th of February. Sorry, if we can go back, on the 5th of May, the 14th of July, and the 8th of November. And remember, this is for members only. We will provide you with templates, guidelines, policies, and we really look forward to guiding you to become compliant. Then we have our digital contact sessions, and that is open for everyone. We haven't confirmed the themes yet, but this is the preliminary dates: the 17th of March, the 7th of June, the 4th of August, and the 6th of September. And usually what we focus there is on data and technology to make sure that our members and our non-members are up to date with what is happening in the industry. So at the end of the session, we will be having games that we are going to play. So the way that we want to structure the session is we want to do all of the compliance presentations. Then we want to do a question and answer session. Then we will look at our sponsors, and then we will have a giveaway at the end of the session. There's a lot of games to be played, and obviously a lot of money up for grabs. So let's start with the National Credit Regulator. Guys, I think it is very, very important that we listen to these presentations. We make sure that our staff also takes in the information. This is our regulator. They make the rules, and we have to stay up to date with the changes that are taking place. First up, we have our speaker, Zolile. He's from the NCR Registrations Manager. He's also the Compliance Manager, so he does both of those work. Prior to this, he was the Complaints Manager, the Compliance Supervisor, and the Senior Registration and Compliance Officer with the NCR. He used to work for F&B as well. He's got an Honours Bachelor's of Commerce and a certificate in Compliance Management. So Zolile and I really do have a very good relationship. We work together on a daily basis. So listen to his presentation and make sure that if you have any questions that you want to ask, you put them in the chat box. The questions will only be answered at the end of the session. And if you are afraid to ask the question, you can also send me a WhatsApp. My number is 083-379-6387. I'm going to put it in the chat box here. If you want to maybe WhatsApp me the question, then I can also ask the NCR. So over to you, Zolile.
Good morning, ladies and gentlemen. Yes, as I've been introduced, Yes, I will be today just discussing the issues about compliance and also just touch a little bit on the registration part. And our main focus today will just be on the, can I just take us to the next slide? Yes. As the compliance department, we do compliance in respect of, we've got 6 tiers. We're looking at the conditions of registration, if our registrants do comply with the conditions of registration. We also do desktop monitoring. Sometimes we just do on-site visits. And then the other one, we're just looking at the market conduct. We're also looking at we do conduct industry workshops. And then we'll also submit the submission of statutory reports. We also look at them and see submissions and also analyze those reports. Can just move to the next slide. Then basically that is coming from our mandate, where is derived from section 15C of the Act, which give us that we must monitor monitoring of consumer credit industry to ensure that there is prohibited conduct is prevented and detected. And as I've just mentioned, the forms of monitoring, how we deal with that. But our focus today will be on the top one, which is desktop monitoring. Yes, we can move to the next slide. I think as a desktop compliance, our main issue here is just to ensure that our registrants, they increase the level of compliance. This is just to assist our registrants to ensure that they comply, because some of them, once they enter the market, there's still some issues that they find challenging, then we assist them in the compliance space. And then we are also mainly more of corrective than punitive in nature. And with that, what we mean is to ensure that whenever there's some challenges that the registrants find themselves, we help them to ensure that they adjust and what have you. But if now it becomes, once the compliance, they've been informed of the, how to correct things, but they still continue with non-compliance, then it becomes now a matter of now becoming a punitive measure, and then that can be done investigation and all those stuff. But in the main, for now, as a compliance department, we're more on a corrective, making corrective action. But with regard to desktop, what we normally do as a department, we will send a request to our registrants just to ensure that we need them a list of credit agreements that they've entered in a specific period. With that list now, what we normally give that registrants just to give us at least within 5 days to say, if for argument's sake, we'll specify that as from give us all the list of credit agreements that we've entered between the 1st of January up to the 31st of June to do that 6 months period. Once we receive that list, then we'll just do randomly select from that list and send you that list and say, now can you please provide us with the documents that relate to those credit agreements that you've entered into. And then we also give the registrants 5 business days as well, just to submit that information for us so that we can look and with that. And then the next slide again, on the next. Then these are the documents that we mainly require as from the list that we've selected. We want to ensure that when you look at these things, like with the pre-agreement statements, the quotation, as well as the credit agreements itself, the affordability that was conducted when the contract was entered into, the methodology that was used, and also the verification of the income that was done, as well as the credit reports that were used, and the instances where there was insurance as well. We need insurance policies. If there was new pay, also any debit order that will be going through. We want to ensure that all the documents that you've used when doing an assessment, they are given to us so that when we do the formal assessment, we can just check if all the matters have been addressed to. And then with regard to now, one of the main things that we are looking at is just to ensure that there was definitely no reckless spending, because sometimes there will be issues where there's a reckless lending, but this specifies where is the reckless credit, where are the credit agreements regarded as reckless. Mainly is derived as where a credit provider fails to conduct an assessment, and then as per section 8.1.2, and we also look at when that assessment was done, was it done correctly, and all those stuff. And also when the credit provider has having collected the assessment, sometimes you'll find that they continuously enter into credit agreements, even though the consumer, when they did the assessment, they could see that the consumer will be over-indebted. So those are the things that will also guide the registrants to ensure that they adhere to the matters and also make sure that they don't continue giving registrants, consumers, loans, whereas they could not afford. And that is because it becomes a problem sometimes that now the consumer will be over-indebted. And then also you'll find that the registrants at the point in time as well, the credit providers continuously enter, even if he has already applied for debt rearrangement. Thus, it's been discouraged because it will also, once there's a debt arrangement, then definitely it means that person there will not be required to get that loan. And then we move to the next slide. And then, however, we also look at what are the transactions that are excluded for reckless lending. These are covered in the regulation 23A as per the loans to juristic persons, developmental credit, student loans, pawn transactions, as well as incidental credit, and all the other, we just so that when you do the affordability, then these are things that we are guaranteeing that the credit providers, those ones are excluded for them to do the affordability assessment. And then the next slide. Then also what we also look at as well is the cost of credit. Because once we've received all this documentation, we want to ensure that the charges that were imposed on the credit provider, on the consumers, they are within the maximum prescribed, and more especially the initiation fee, because there's maximum fees that needs to be charged, and we ensure that in an instance where the fees, the initiation fees overcharged, then we must have corrected, they must be corrected as well. Looking at also the service fees that were charged, we're looking at the interest rates as well that were charged, because the regulation 42 specifies exactly what the maximum that needs to be done with respect of that. And then also, as per section 100, there will be, sorry, there was just a disturbance today. And we ensure that we adhere to the maximum interest rates and service fees that are charged. And we can move to the next slide. And as per the regulations that I've just mentioned now, regulation 44, here the specified maximum interest rates and the initiation fee that needs to be charged. Then we ensure that these are, when we look at once we've received the documents, those are the things that we look at and say, now has the credit provider adhered to at home, charge the consumer within these maximums, and then hence we do the calculations based on that. And then move to the next slide. And then also here is talking about the interest rates as per different categories. As you see in the case of mortgages, it's repo rate plus 12% per annum. Credit facilities, repo rate up plus 4, as per all the highlighted there. And looking at all, and more especially now with looking at the unsecured credit agreements, as well as the short term, which mainly the credit small macro lenders will fall under that short-term credit transaction, which means the first month they're allowed to charge only 5% per month. But if there's another loan that comes within and subsequent to that calendar year, they must ensure that they charge only 3% per annum. Then that's where most of when we find there's not a lot of non-compliance in that space, because people will continuously charge that 5% per month, even in the subsequent loan. And hence now, those are the things that we need to inform our registrants to ensure that they comply with, and they make sure that they adhere to that specific, to that maximum interest rates. Then move to the next slide. Hence, as I've mentioned when I started, just to mention that we are not punitive. We are just trying to rectify whatever. And then in those instances, once we've looked at all the documentation and we reviewed, we checked and what have you, then we look and say, is there any contravention in the maximum interest rate, or maybe there's reckless lending that has been done? Then with that, we normally done, once we've made a finding, then we'll give you an instructional letter. The instructional letter will specify and give you what you are required to rectify, and then also what are the remedial actions that needs to happen. It's sometimes in instances where we picked up that there's instances where interest rates were overcharged or even initiation fee, we sometimes then ask a credit provider to ensure that they refund consumers in those instances, so that we can, and then going forward, they will ensure that they adhere to the maximum interest rates, and then there's no going forward, then that process will be rectified. But in instances where there's definitely non-cooperation with regard to the instructional letters, then compliance notices will be issued. And then with that, later on, if needs be, then the matter can be referred to the tribunal, depending on the seriousness of the contravention. And also, but mainly as a compliance department, our main focus is to ensure that our registrants rectify whatever is still issues that they find themselves. And then based on, if they fail, then that's where now the issues like compliance notice can be issued. I think they will move to the next slide. I think as a department, we've been doing this debt stop for a while, and there have been some challenges that we're finding ourselves, we find here, more especially lack of cooperation from the registrants. We can say maybe it's just a matter of registrants didn't understand what our role and what do we do exactly with the information. Hence, now we just want to clarify the point that yes, it's not when we ask for those documentation that we require, we're also just trying to help and so ensure that as the registrants, you ensure that you are compliant. And if definitely there's no issues of non-compliance, we rectify them as soon as it can be possible. And then going forward, we know that we're all in the same understanding of the issues. And then in that instance, I think that is where we've been finding a lot of challenges. Whenever we ask for information, registrants will be reluctant to submit information. It will take us a while to make them understand. But in here, we just want to ensure that the registrants, we give you the assurance that we are trying to assist each other as the regulator, as well as your business, so that you can also be compliant. And hence, we really insisted that and ensure that people must just cooperate. And then in that instance, we'll be working together so that we help each other. And then sometimes as well, some registrants submit information, but it's incomplete. And that is why now there's always been up and down emails requesting information, and people are not, will not get what is required. And then in that instance, now it becomes a problem between the regulator and the registrant. And hence, it's very key that registrants, we would like to keep all your records and then submit us with the correct information so that we can pick up and address whatever matters are picked up. And then also the one thing as well that we picked up is also the lack of record keeping. Because now when we start asking for documents, the registrants will say, no, we don't have these documents and whatever. And then one of the key as well that even if they've submitted some of the documents, you'll find that the credit record where they used when the applicant, when the consumer was requesting information at that point in time was not kept. And now when we request documents now, they'll just go to the credit bureau information and give us the information that is current. And whereas the contract was entered into about three months ago, and there's no correspondence between those documents. And hence it becomes a challenge when we do the assessment and check if definitely was done. And then in that instance, we can find that in our understanding will be we have not done the full affordability at that point in time, whereas the registrant has done that, but it's just a matter of they failed to keep the records. I think that's where it's also key that as the registrants, you keep your records to ensure that whenever there's issues that will come in respect of a challenging or something with the consumer, disputing whatever, then at least all the documents that were used when they're doing the assessment, they're all kept at the same time in that instance, so that there's no issues with regard to going forward. I think we will move to the next slide. I think just on that, we're just talking on a high level so that there must be an understanding of why do we need documentation and also helping each other. We were just wanted to, but now going forward, at least now we wanted to explain But as each and every time now as consumer, if we were to ask for information from a specific registrant, we will be in detail exactly all those things. But this one was just a bit of assuring you as registrants, what is the role, why are we doing desktop? And secondly, why are we also, we require this essential information and what do we do? And basically that's how we do the desktop. And then in that instance, so that even now going forward, where the registrants were reluctant of submitting information, we give you the assurance that definitely this is what we do and how we will communicate our findings. If there's anything that we need you to rectify, we must ensure that we will communicate, give you feedback. Even if there's nothing that we picked up, we will assure you that yes, of the samples that we've taken, there was now issues of non-compliance, and then we'll ask you to go continue cooperating going forward. That's basically what was of more concern with regard to the desktop. But now I'll just move to the registrations, which I think the registrations department's function. The registrations department, basically our main role here, we register all these credit providers, do the lapsing, and also the cancellation. Those registrants who do voluntary cancel their registrations, and then also managing the renewal fees, and also ensure that also they keep up to date the register of registrants, and then also printing of the registration certificates. And we'll move to the next slide. This one is just the requirements of registration, but the majority here, I will assume that they're all registered. We will not go into detail about the requirements for now, because I think with that space has already been covered. We can move to the next page. Yes, I think then this other one is for, the first part was just for when a person is applying for just a normal registration as per section 40. And then there are also those that require now to add more products in terms of regulation, section 41, which is developmental credit. Then developmental credit, we require more information on those who apply for developmental credit, which requires them to submit information that is talking to their financial resources, their human resources, adequate of admin processes. And also we need a motivation, because developmental credit is got quite a lot of things involved in there. And then we must ensure that whoever applies for developmental credit meets certain requirements as well, which also the motivation that comes with that, because also the interest rates, they are quite, they are given at least a higher interest rate to do developmental credit. Then we can move to the next page. Then as a department, I think basically now this one will address mainly what are the challenges as a department, and also the registrants, which affect our registrants, more especially when it comes to the renewal time of registration, issues of delay with regard to the certificates, issues of not payments and all those stuff. I think that's where I'll just maybe take most of the time here. The one challenge that one of the challenges that we've picked up a lot is that registrants don't update if there's changes of contact people or any change in directors or whatever. And that also leads us as a registrant, because whatever information we do, we send as per what information we have. Now you'll find that there was somebody who is a contact person subsequently has left the company, and we email the invoices and all the correspondence to the same person, but later on the registrant will say they have never received my renewal invoices or notification. And then those are the challenges, because we send it to the wrong person who is no longer in the company. And hence it's very key that our registrants keep information up to date, so that when they come up renewal time, we are sure that we've sent it to the correct person. And then also with regard to the submission of Form 39. The Form 39 is our statutory return, and the renewal fees are based on the principal debt that is picked up on the Form 39s. Now, when we bill the renewal fees, we will use the Form 39 information, the principal debt that we have, as the last Form 39 that we have. Now, what normally happens now, when we've sent the invoices to the registrants, they'll come back to me and say, no, actually the principal debt is wrong. The fees that you've charged me are incorrect because my principal debt has dropped from this much to this much. And at that point in time, the principal debt, the Form 39 was not submitted. And that causes a delay in us as the regulator to ensure that you get your certificate on time. And then also, then that causes a lot, because there's always going to be now the invoices that have to be changed so that there's correct payments that needs to be made. And then also the issues as well that we find becoming a challenge between us as also the registrants is the issues of branches. We'll find that a registrant had 10 branches. Now, when we send an invoice, we'll send based on the 10 branches that we have on our system. Now, the registrant on the other side now maybe has closed 2, is left with 8. When they make payments, they'll just on that invoice, we put only for 8, that's the 250 for those 2 branches that they have. And on our system, it reflects as short payment. And that causes us delaying to print the certificates. And those are the things that we feel is key that as we must work together. If there's definitely a closure on the branches and they're reduced, we must be informed on time so that when we prepare the invoices, we ensure that we've got the correct branch numbers, and then also the invoice is correct so that there's no delay in us sending us those invoices, correct invoices. And that is where I think the main challenge that we pick up as a department between us and people will say, no, I've paid, but there's a delay on where's my certificate. And those are the challenges because now on our side, it could be regarded as short payment because you've only paid whatever amount that you've paid. And then the other challenge that we also pick up, in our invoices, we specify that registrants must use their NCRC numbers or NCRTCs if it's a DC. But sometimes they'll put the name of the entity in the reference space, or maybe the registration number, or SPC Pro, or maybe the ID number if it's an individual. And it's difficult to allocate that payment towards the right, and that money will go to our suspense account. And now when a registrant requests his certificate, in our records, it's reflected as unpaid, is still outstanding. And then that creates a problem because now on our side, we'll say we have not picked up that payment. And on the other side, you say, then we'll only ask for proof of payment. It's only then that will pick up. And that causes also another delay and frustration from more especially you as registrants. Those are the things that we feel that at least we need to ensure that we make them, we ensure that we use the correct reference numbers when we make payments. The next one as well, sometimes when we send invoices, the invoices that we've built now, they specify that as per the regulations now, the issue is about you have to pay by the 31st of July. If you fail by the 31st of July, there's a grace period up to the 31st of August. But the first 15 days, which is the 1st of August to 15th of August, there is a 10% penalty fee that is charged. But failure from the 16th up to the 1st of August, then there's a 20% penalty fee that is imposed. And in our invoices at the bottom there, we put, if you fail to pay at this point in time, you must pay so much as well. It's specified on that invoice. But now registrants, what they'll do, even if they pay on the 10th of August, they'll only pay the amount that is was due. And then in that instance, the penalty fee is still outstanding. And hence now it creates a problem because now when we cannot print the certificate because we see there's a short payment that is still outstanding there. And hence we need the registrants to ensure that they pay also the penalty fees upfront so that when we print the certificate, we give them on time as well. I think we'll move to the next slide. And then the other challenge that we picked up in the last years, we've been sending certificates through by registered mail, but we can say the bulk comes back with from the post office being not collected. And what we've been doing now of late, what we've been doing before we send the by registered mail, we'll send a copy via email and specify the tracking number as well to the registrant and say, here's the tracking number of your post office, go and collect the certificate. But those certificates are not being collected. They still come back to us as well. And now the registrant will always ask, where's my original certificate? What has been posted? I think this challenge, what we've been encouraging now of late, even this year, we have not sent a lot of certificates by registered mail because we picked up that they always come back. We encourage registrants, more especially those who are around Gauteng, to come and collect in our offices immediately when they receive an email that says it is ready. And those who are just outside, then what we normally ask them as well to send courier services to pick up. At least now, it's a guarantee that at least your certificate is you've received, because it becomes a challenge that now the certificate is moved and now sitting at the post office, and now somebody comes and then the certificate is not here, although we have already sent the copies. Those are the challenges that we picked up, that yes, the registrants on our side, they get frustrated because they don't have their certificates, but these are the things that we picked up that are contributing to us not to the registrant not giving their certificates. And also with regard to those who cancel their registration, you'll find that the voluntary cancel, there's a form 10 that they complete, but they submit documents that are required as per regulation 58A that needs to be also be submitted, and also delays if we've not received all the documentation on time. And then those are the things that we encourage consumers to ensure that, sorry, registrants to ensure that they submit all the relevant information. Then I think we'll move to the next slide. And this one is just the statistics information as to end of 31st of October. We currently have about 8,937 registrants, CP registered, and then also about 41,490 branches, credit bureaus 44, debt counselors 1.7, PDAs about 4, and ADRs. And I think we can move to the next slide, and then I think that's all from my side that I just needed to share with the team, with everyone, but thank you very much.
Thank you so much, Zolile. I think the questions came in quite a lot, so I am noting all of these questions and we will handle some of them at the end of the presentation. Obviously, we will not be able to handle all of them, but what we can do is we can note them and then we can provide our members with feedback. Thank you so much for the presentation. We really do appreciate it.
Thank you.
Great. Next, we have our speaker, Anna Ploy. She's the Manager of Debt Intervention, the Acting Manager of Education and Communication, and the Acting Manager of Investigation and Enforcement. Anna-Karine is a legal advisor. She is part of the Investigations and Enforcement. She's the manager. She's also the Debt Intervention Manager, like I stated. She's got 10 years experience and expertise to legal matters. She's got a BCom and an LLB from the Northwest University. So thank you, Anna-Karine. Over to you. We really look forward to your presentation.
Thank you, Renee. Good morning, everyone. Nice to present at one of your conferences again, and I trust that this presentation will give some insight into questions that's been raised by members. I will mainly focus on update of policy, case law, legislation, and investigation matters insofar as it relates to the investigation department. So I think in previous years, I also touched on other departments, but seeing that the compliance department is represented today, that part was dealt with by Zolile in great detail. Thank you, Zolile. The outline of my presentation today will be the introduction on the mandate and objectives of the NCR and the investigation department specifically, non-compliance that we identified during the course of investigation. So I will touch on reckless lending and cost of credit because that seems to be the biggest contraventions that we identified on most or the majority of our investigations. And then just in general, an update on debt intervention and case law updates. I think it's important for me to touch on debt intervention and just update industry on that, although there's not a lot of change that's been happening since the Act has been signed. So the mandate of the NCR was established in terms of Section 12 of the Act, and it is to regulate the credit market in South Africa and monitor compliance with the Act. The mandate of the NCR centers on the regulation of the consumer credit industry, and it includes promoting transparency and fairness within the consumer credit market. So the investigations and enforcement department are mainly focused on formal investigations. So we are different from the compliance department in the sense that a reasonable suspicion must be established for my department to go in and formally investigate a registrant. So we need to have reasonable grounds to investigate. For example, a complaint that's been lodged with the NCR, a newspaper article that gives rise reason for us to believe that a registrant might be acting in contravention of the Act. We receive anonymous tip-offs, and then we'll have a reasonable suspicion to investigate, and I will be launching a formal investigation. Once the investigation is finalized, should we find that the contraventions are indeed confirmed and the registrant are contravening the Act, we will take the necessary enforcement steps. So enforcement essentially means once the investigation has revealed evidence of non-compliance with the Act, appropriate action to punish, prevent, and/or correct the conduct must be taken. So I think there's a misconception in industry that we immediately go for deregistration of registrants. Where the contraventions are severe enough to warrant deregistration, the referral will include deregistration. It's not always an order that we get from the tribunal, and in the majority of the cases, we only get prohibited conduct. So I think that is just something that must be said straight in industry, that we are there to correct the conduct of registrants and not to put registrants out of business. So where we deal with unregistered entities, we will involve the Hawks, the Consumer Protective Police, and we receive information of unregistered entities that's acting in contravention of the Act from tip-offs, complaints, and compliance exercises that's been conducted. So our registration department also embark on roadshows to ensure that unregistered entities can lodge applications to be registered with them. During the roadshows, they immediately attend to the registration process, and the registration is then processed. I think the COVID situation that we find ourselves in is posing a bit of a challenge for our registration department in that regard. But seeing that we are on level 1 now, I think all the departments will be going back into the field, including my investigations department, who is conducting face-to-face investigations again. Then investigations in the COVID area, we had to adapt a little bit to accommodate the fact that face-to-face interaction was restricted. So we started to conduct desktop investigations. So I think there's a lot of confusion that's created by this, because the compliance department conduct compliance exercises through desktops. We conduct desktop investigations now. So I think it's important for registrants to notice the difference is that a suspicion must be formed for investigation. If there's no suspicion, there's no reasonable grounds to investigate. So the registrant will be clearly notified of the fact that they are subjected to investigation and not just a compliance check. Your rights will be read to you, and you will be asked to complete a form and send it back to the inspector afterwards to confirm that you understood your rights. You will be provided with a copy of the Section 25 certificate, which is a certificate signed by our CEO, authorizing an investigator to conduct the investigation. And then, very similar to a compliance check, you will be requested to provide the inspectors with samples of agreements, which will be randomly selected from a list of consumers that you will be requested to provide the inspector with. I think in this respect, I want registrants to note that where inspector asks for sample of agreements, please provide them with all the supporting documentation. What we found is that the challenge that we are faced with desktop investigations are that we're only being provided with selective information. Once we refer to the tribunal, the registrant comes up with the supporting documentation that weren't provided in the first place. So that poses a risk in that it's a reputational risk for the registrant. It's an audit finding for the NCR in that there's wasteful expenditure that's been incurred in conducting an investigation that's not bearing any fruit. And then we also refer to the tribunal, which is it's got a cost impact on the registrant to oppose the application. So non-compliance that's identified during the course of the investigation will be communicated to the registrant. So the registrant will be issued with either instructional letter, a compliance notice, and or a referral to the NCT. So it's very rarely in my department where we just close a file, because once a registrant reach the stage where we are initiating an investigation, we've got reasonable grounds to believe that there is contraventions, and usually we identify some contraventions. It might not be so severe or as severe as we thought when we initiated, but there is usually contraventions that needs to be actioned. So in that instance, we'll issue an instructional letter, for example. So like I mentioned previously, two of the biggest contraventions that we still identify, I think this is something that I talk about every time when I present at MFSA conference, is the failure to conduct proper affordability assessments. So we found that there's no pay slips, bank statements, or credit reports in client files. Loans granted to consumers under debt review administration or where financial distress is clearly evident. So I think with the COVID pandemic, this is more on the increase, where we find that consumers is under debt review apply for loans, especially with microlenders, and the loans is being granted. It will constitute reckless lending, and we will be referring that. So where there's reckless lending, we will definitely refer to the tribunal, seeing that a compliance notice cannot cure the contravention and offer any relief for the consumers. So information contained in credit reports is often being ignored by credit providers. And then credit providers must take note of the following. The old way of doing things still applies. So what we've picked up, that there's a form of confusion that exists in industry because of regulation 2311 that's been set aside through the truest judgment. And it must be kept in mind that section 81.2 still stands. And 81.2 is very clear on the supporting documentation. 81.2 read with regulation 55 is clear on the supporting documentation that must be retained and provided during the course of the investigation. So maybe just enlighten yourself with section 81 and regulation 55 and get clarity on what needs to be retained and provided. I know that there's a conception that exists that bank statements are sufficient. Section 81.2 is clear that you need to be able to verify income. So proof of income through salary advice is necessary. So some examples of non-compliance to affordability requirements are: lending is done on the basis of trust. No pay slips, bank statements, or credit reports are found on client files. Information contained in credit reports is ignored. I mentioned that previously as well. Loans granted to consumers under debt review administration, and such findings will be referred for investigation, and enforcement action will follow. I think I need to stress that reckless lending will be referred to the tribunal for them to make a finding on that. As a calculation of the consumer's existing debt obligations, the credit provider must calculate discretionary income to determine whether the consumer can satisfy the new debt. So the discretionary income is calculated by taking the net income, deducting the minimum living expenses, deducting the credit bureau obligations, and then you'll get the discretionary income that needs to be taken into consideration. So regulation 23 is clear on the criteria to conduct affordability assessments. And it must be kept in mind that section 81 must be read with regulation 23. 81 provides, it's an instruction on what needs to be done, and regulation 23 provides guidance on how to conduct the affordability. So regulation 23A3 states that a credit provider must make a calculation of the consumer's existing financial means, prospects, and obligation, as envisioned in section 78.3 and 81.2A3. Regulation 23A9 states that a credit provider must utilize the minimum expense norms table when calculating the existing financial obligations of consumers. So I will get to this later, where the minimum expense norm tables are being applied incorrectly or not taken into consideration. So the minimum expense norm table requires for the credit provider to ascertain the consumer's gross income, to which the statutory deductions are to be deducted to arrive at the net income. It's very important to note that where the consumer's income shows material variances, so the average gross income must be used. So the 3-month income statements of the consumer, or the financial salary advice that's been provided, shows material variances. The registrant must work on an average when conducting affordability and determining the minimum expense norms. So if you look at the minimum expense norm table, I think there's something that I just want to touch on very quickly, just to maybe answer some questions insofar as it relates on how to conduct the calculations. What we've picked up in industry, that there's tables that registrants are using, which is not complying to the minimum expense norm table. So there's the minimum income, the maximum income, the fixed factor, and then the monthly fixed factor percentage of income above the band minimum. So I will just touch on how the calculation needs to be conducted. So you will take the net income, deduct the minimum, the column 1, and get an answer. Then you will take the answer, multiply it by the monthly fixed factor, and you will get answer B. You will take answer B plus the minimum monthly fixed factor, which is the third column under the minimum expense norm columns that I just shown, and then you will get the minimum living expense that needs to be taken into consideration. So I think just for example, the consumer falls within, so a consumer earns a net income of 8,000 Rand. He falls within the third row of the minimum expense norm table. So you'll take the 8,000 Rand, deduct the minimum of the third row, which is 6,250 Rand. Then you will take the amount that you get and multiply it by the percentage, and you will add the two together to get the minimum living expenses. So I think this is something, if there's questions that's raised, we can always take it offline, and I'm more than willing to sit with members and take them through these calculations if there's some concerns and uncertainty on how to conduct this calculation, because we've picked up that this is done incorrectly and then it results in red list. So in exceptional cases, the credit provider may accept the consumer's declared living expenses that are lower than those calculated as per the minimum expense norm table. I think it's very important to note here that it is exceptional. And should we refer you to, or should we find that you make use of the declared expenses on all your consumer files, for example, you won't be able to convince us or the tribunal that it's exceptional, because it's impossible that your entire consumer book consists of exceptional cases. So in cases where there is exceptional circumstances, a questionnaire set out in the schedule to the Act must be completed where the consumer declares and consents to the actual living expense being the credit which the credit provider may use in conducting the affordability assessment. I think what we found here is this especially happens where credit is granted to SASSA beneficiaries. And it is something that we are challenging, and we issued instruction letters and compliance notices against the relevant credit providers where we found them to, for example, let all the consumers who takes out credit with them complete a declaration. So in that regard, I think I mentioned this previously, but the child support grants cannot be taken into consideration when affordability assessment is being conducted. So this has been clarified by the tribunal, and we've got a judgment in our favor where the tribunal found that child support grants is not part of income when affordability assessment is being conducted. So we are still finding that credit providers are considering child support grants in their affordability assessment calculations. Then cost of credit is also an area that we find a lot of non-compliance on. And I think Microfinance SA and another versus the National Credit Regulator and another clarified this point for us, in that it declared that the pro rata charging of a service fee, so especially the pro rata charging, seems to be problematic. So in this judgment, it was found that for the first month, the service is not required to be charged on a pro rata basis. Just the first month, it will be calculated on a pro rata basis. For the remainder, it will not be calculated on a pro rata basis, even if the consumer satisfy the entire debt amount before the end of the month. So just the first month is to be calculated on a pro rata basis. And I think while we are on this point, credit life insurance are not to be calculated on a pro rata basis if you look at the regulations of the Act. I just want to touch on the most recent case law updates in industry and maybe just give an indication as to what contraventions are being referred and what type of praise we are requesting from the tribunal and what type of orders are being granted. So in the matter where we refer CWIS to the tribunal, we asked for deregistration. This credit provider was referred for various contraventions of the Act, which included reckless lending. So obviously that's why we asked for deregistration. and the entity failed to conduct proper affordability assessments. The NCT agreed with us and they cancelled the entity's registration with immediate effect. They interdicted it from extending further credit and from collecting on any reckless extended agreements. They were requested to conduct an audit, and the entity was imposed an administrative penalty of 150,000 Rand. I think this case is important for the NCR because the NCT confirmed that the NCR can initiate a complaint based on a compliance monitoring exercise. So it does happen that the compliance department conducts a compliance monitoring exercise. They identify that the contraventions that they found during the compliance exercise is so severe in nature. Like I mentioned previously, reckless lending cannot be cured through a compliance notice. So it warrants for investigation and a referral in order to get recourse for consumers that's been affected by the conduct. So in that instances, we are allowed to initiate a formal investigation based on the compliance exercise. And that is something that's questioned in industry on a regular basis, but we've got clarity on that, and the tribunal handed a judgment down in our favor. So the NCR versus Portal Finance. Here we referred the registrant to the NCT for serious contraventions of the Act, which also included a failure to conduct affordability assessments, reckless lending, and overcharging on cost of credit. The entity was interdicted from further engaging in prohibited conduct, and they were imposed the administrative penalty of R1 million. So if you get a referral from our department, you will note that we always ask for an administrative penalty of R1 million. So being a creature of statute, we are bound by the prescripts of the Act, and the Act allows for 10% or R1 million, and that's what we include in our prayers. We always argue for the R1 million, and we always get that registrants' attorneys argue for the 10% or lesser. And it happens that the tribunal find that the contraventions is not so serious, and an administrative penalty of 150,000 Rand is imposed. But in this instance, the tribunal agreed that the contraventions is serious enough to impose a penalty of R1 million. Then the NCR versus SCL. So very similar to the Portal matter, referred for the same type of contraventions. We got due registration and an administrative penalty of R1 million. So I think you will note that the penalties that we get and the recourse that we ask from the tribunal is really severe, and it's got a huge impact on business. So I really caution and request that everyone try to comply so far as possible. I think all our departments is very open for discussions when there's questions. If there's questions, we've got an educational department who's also more than willing to assist with training. The compliance department, I'm sure they are open to training sessions as well. And then from the investigations department side, I'm always more than willing and available to train on our processes and what we look at when we conduct the investigation. Then there's the matter of option deals versus the National Credit Regulator. So I think this is just a case, it's not really, it's an unreported case, but it's just an interesting case to note. So here we refer the entity to the tribunal, where we found that they are disguising credit agreements as sale and rental agreements, sale and lease agreements. So the tribunal agreed with us that this is in fact a credit agreement that's disguised as a sale and lease agreement. So it's a simulated transaction. They took the matter on appeal, and the Pretoria High Court agreed with us. So on interest rates on short-term loans and the review of fees, this is something that I've been presenting on for quite a while now, and unfortunately there's no further update on it. The fees and interest rates are due for review. The NCR made the recommendation to the DTI, and we are still awaiting feedback from them. And then there was also an amendment that we presented to the Act where we wanted for decounting advertising practices to be certain practices to be declared to be in contravention of the Act. So certain words to be excluded, exactly the same format that's followed with advertising credit. So the debt intervention, I think this is something that everyone is very well aware of. What the rationale of the bill is that the existing natural persons insolvency measures are not accessible to all consumers. So the rationale behind the bill was to cover for consumers that can't access the existing measures, and that will be a natural person with unsecured debt of 50,000 Rand or less, and income of no more than 7,500 Rand per month during this 6 months preceding the application. So on this, I'm just touching on it very highly because there was no further developments on the National Credit Amendment Act. The bill was signed into law on the 15th of August 2019. We are still awaiting promulgation of implementation. There's been task teams that's been formed. We are working on system development, and the DTI are working on the development of regulations. And the readiness of the NCR was presented to the Portfolio Committee on more than one occasion. But there's no indication as to whether this will be implemented and or when it will be implemented. I just thought it's something that I've been touching on for 2 years. So it's something that I just wanted to update industry on. So that's all from my side. I don't know if there's any questions that you wish to raise.
Great, thank you so much, Anna-Karine. I think I saw a number of questions coming through. Let's go to the final presentation from Timmy with regards to debt counselling, and then we will start getting to all of the questions. So yeah, thank you for the informative presentation. I think there's a lot of questions coming through, and this whole recording and the presentations, in the recording will be available to our members to review again. Okay, up next is Timmy van der Gryp. He works in the debt counselling department. He was admitted as an attorney in the High Court of South Africa. He's got an MBA. He's the custodian of debt review activities nationally. He also sits on the CIF committees with the MFSA. He's the chairperson of the amendment NCAA subcommittee. We also work together on a day-to-day basis. So, Timmy, over to you. Let's do the presentation. Let's get the questions. And yeah, we look forward to what you have to share. Thank you.
Well, thanks, Leonie. Just to check my sound, we had problems yesterday. If you can just confirm with me.
I can hear you loud and clear.
Oh, awesome.
Right.
Thank you, everybody. Thank you for the opportunity for me to again be part of this. I think it's the 3rd year that I'm involved. I'm going to just take you high level through the debt counselling department's compliance monitoring. Leonie, if you could just indicate if you can see my presentation.
I can see it, but on my side, it's flickering black and white. Okay, that's better now. Good, great. I can see it. Thank you.
Okay, all right. As stated, I'm going to take you high level through the monitoring tool that the debt counselling department use. And I think at this stage, it's just important to know that the debt counselling department only do compliance monitoring on the debt counselling departments of the credit providers. So we would not like the credit provider compliance department look at you as a credit provider as a whole. The debt counselling department would only look at your debt counselling department within your company, and also just look at the debt counselling activities in which your company is involved. So I'm going to take you through the NCR Credit Provider Monitoring Tool that was developed for the debt counselling department specifically. And it is divided into 5 sections, the tool. The first one is the infrastructure, the systems, and the contacts within the credit provider itself. The section 2 is the compliance with the process. So that's how the credit provider is complying with the debt counselling process as set out in section 86 and the task team agreement. Section 3 deals with the PDAs, the interaction of the credit provider and the PDAs, and the distribution of funds. Section 4 is support to the credit provider. That's where we look at trends that you're picking up or problems that you're having. And in section 5, the overall comments on the monitoring that has been done. So the monitoring tool, why compliance monitoring? Like Zolile said, compliance monitoring is always corrective and supportive. It's never punitive. And what the regulator wants to achieve by going through compliance monitoring with you is to see that you understand the process, that you have everything in place to make the process work from your side, and that you can actively participate within the debt review space with debt counsellors, other career providers, and the courts, whoever is further responsible for actions within the debt counselling space. We look at the scope of the debt counselling compliance monitoring, and like the investigations department, there's also COVID that had an effect on what we do. So we had on-site normally. I visited quite a few views in the past on site where we do the monitoring, but now we've also got desktop monitoring that has come into play. Now, for on-site visits, there is a physical monitoring tool document, a Word printed document that we take with. We supply you with a copy as well, and then we go through all the sections together. We then fill it in and then use the completed document for our final report, which we will deal with right at the end. And then for desktop, what we did to make the process easier for you as the career provider is we developed it into an online survey. So all the questions that would be in the physical Word document would be contained in the survey, and you would then go one by one, answer multiple choice if that is applicable, or there would be a block where you can, type in the answer, and there's quite a few that is required. Now, finalizing such a survey takes about 1.5 to 2.5 hours. So it is really an intense document that you have to look at, and you'd probably have to call, various persons if you don't do it all yourself, which you probably don't. And you're going to have to call all the various staff members that deals with these issues to come and assist you in completing the online survey. Now, we thought that that would be the easiest use of technology, to solve our desktop problems. And if you struggle with the online survey, which you shouldn't, just let your monitoring officer know what you're struggling with. And also at the end, you press submit, and it immediately submits the results to us at the NCR. And you don't have to send emails or print things or do all sorts of things. So it's quite a nifty little tool. We've tested it and it works quite well. And we developed that to assist the monitoring. And the debt counsellors, just by the way, have a very similar tool that we developed where we also look at all these 5 sections as well, but obviously ask the questions with a debt counsellor hat on, instead of with you where we ask the questions with the career provider hat on. Right, let's get into section 1 where we look at infrastructure and systems. Now remember, these are the infrastructure and systems at your business, and we ask simple questions like, do you have a debt review department? What is the structure and the capacity, as well as the escalation process? We want to see that you have enough people that is dealing with the debt review queries that comes. Who is the contact person for your debt review department, the name and the contact number, and the person who would be responsible to sign off on the monitoring once completed. And then we also have a look at the systems that the query provider is using for debt review. There are a lot of systems that are similar, that accepts documents electronically and then also create documents electronically for query providers, such as COBs and so on. And we found that systems that are used are like Halo, for an example. And if there are additional systems, we discuss that and we see if those systems are sufficient to assist you as a query provider to comply with everything that is happening in debt review. So in infrastructure systems, we're really looking holistically at what you've got and what you're doing at your office to deal with debt review matters. Now, section 2 is compliance with the process. I'm going to just touch high level on some other issues, but 2 or 3 or 4 issues that are very important always come up. I've just going into that a little bit more. So the first one is the Form 17.1. As you all know, that is when the consumer apply for debt review, and that's a notification that you receive as a credit provider from the debt counsel to say this consumer is going under debt review. I require a certificate of balance within 5 days. So it's very important that that the COBs are sent out within the 5-day period. It's a very time-sensitive period within debt review is the first 35 days. And where credit providers are going to hold up the process by not supplying the COBs, that is something that we look at very, very closely. And we want to ensure that the debt counsellor have all the relevant information, the correct and verified information, to put in their proposals to put forward to court to ensure that everybody is treated fairly and everybody is getting the money that they are entitled to. So another issue, multiple accounts. So if there is only one COB that you receive and the consumer have multiple accounts with you, please make sure that either separate COBs are sent for each account, or like that all the accounts are reflected on the COB. Even if it's on one document, that would be fine. Also, consent to service via email important. I think long gone are the days that we put something in an envelope and put a stamp on it. So I think just make sure that you put a consent to service on your COB. It just makes life so much more pleasant for everybody, that they have the right addresses and they know who to speak to and where to send it to. So very important. And then the prescription indicator, some of the larger credit providers from 2015 have included a prescription indicator within the documents. And I think one of the reasons for that is that from 2015, with the NCAA 2015 amendment, the magistrates did not want to grant any type of debt review order if there were not an indication that that account is not being prescribed. So I think if you don't have that already, just have a look at how you can develop your system and put that in. It will really assist everybody going forward. The second form that I want to just touch on a little bit more than just a standard overview is the 17.2. That's when you've now sent out the balances, the proposal has been done, and the consumer is found to be over-indebted. So that 17.2 will then be accompanied with a proposal, income and expenses, and always check the proposal that the income and expenses are there. You need to make sure that that you're satisfied, that there is no additional monies that is not being distributed to you as the credit provider. Always important to check, and also check that the proposal contains the correct account number arrangements. Where, and then we'll get to that a little bit later under the PDA section, where that account details are not correct, then we start having problems with distribution of monies or unallocated funds and so on, and then terminations that follow from that. Make sure that is done. And then also in terms of the task team agreement, once you've received the 17.2 as well as the proposal that meets the requirements of the Act, so it must be a correct proposal, then you need to cancel the debit orders that you have for the consumers. Very important, because otherwise there's a double taking of monies, whereby you take a debit order and there is a further payment from the debt counsellor, or you take a full installment and the consumer has no money left at the end of the month. So very important. It's something that's very topical and comes up quite often. So make sure that you understand the cancellation of debit orders, when you should be doing it. And if you're not sure, have a look at the task team agreement. It's in Annex B. You'll find that there under, I think it's paragraph 2.13. There's quite an extensive discussion on that. And then proposal acceptance, counters and rejections. Please make sure you get that out in 10 days. We really look at that when we do compliance monitoring, to see if you as the credit provider have looked at it and really applied your mind to the income and expenses as well as the proposal. And we then look at your efficiencies regarding the acceptance, counters or rejections, and obviously the reasons therefore. Very important that that you look at that. Then terminations, section 8610, just look in the Act, it's 60 days from Form 17.2. We look at that you understand the termination process. We found historically that terminations within the micro lending space is not extremely well known and is a bit of a grey area. So have a look at 8610 and see how that works. Also look at section 88.3, a default after the court order. What is important here, 8610 requires a formal notification, 88.3 do not. It's not required in terms of the Act, but a lot of courier providers, as courtesy, do send out a written confirmation of that. So just have a look that you and your staff that deals with it understands the process. And then also, obviously, that flows from that, the exclusion from debt review. Once your account is excluded during terminations, then your contractual terms apply. And also then just note the parties that needs to receive the termination notice, which includes the National Credit Regulator in terms of the Act. So surrounding terminations, and I'm touching on this specifically because it's historically been a misunderstood concept. And it's something that we really look at when we do compliance monitoring. So make sure that you understand the concept, and especially that your staff dealing with the issues understand it as well. And then the final issue I want to touch on is the maximum interest rate on short-term credit agreements, and I think that's very topical for who we're discussing. Matitsu versus APSA and Barnes versus APSA, you can go on the internet. Those are NCT judgments where they say that the 5% is defined in terms of the short-term agreement as defined in the Act, and that even if the debt is restructured, your interest that you can charge cannot exceed 30%, because a short-term agreement is defined as an agreement not exceeding 6 months. You can charge 5% per month. 6 times 5 is 30. I still do see rejections that has been done on the basis that there is a 30% and not a 60%, but that is due to a misunderstanding by the courier providers of the case law and the dynamics of a short-term agreement. So please make sure that you look at this. If you don't understand it, get legal advice on it, especially in light of the Matitsu and Barnes matters, and make sure that you understand that and that you do not charge more than the maximum interest allowed by Regulation 42. And then some other issues. We look at the debt counselling rule system, the DCRS system. We ask some questions around that. If you are receiving them, if you are accepting them, if you're not, what is behind your non-acceptance of it, and so on. Then, as I stated, proposal acceptance and rejections. We look at the time limits as well as the reasons for rejections, if you are. Reckless lending, and we're not looking at this from a consumer or from a debt counselor point of view. We're looking at it from a credit provider point of view. How many reckless lending applications have you received? What is the feedback? Did you comply with the request for documents? Did you oppose this matter at court? And so on and so on. So we look at it from your point of view and not specifically from a consumer or a debt counselor's point of view. Then we obviously look at your court oppositions and attorney arrangements. Do you oppose a lot of matters, debt counselling matters at court? Why do you oppose it? Are you complying with the task team agreements surrounding oppositions? And something that'll be coming up pretty soon is annual reviews that will be introduced by the CIF subcommittee that is working on that. There has been a large call from credit providers to do annual reviews on consumers' income, specifically with regards to increases that consumers get, or where they move up in their companies and they get more money, and they do not disclose that to the debt counselors, and that is obviously to the detriment of you, of the credit provider, where you could have received more money. You actually don't, because you don't know that there has been a change in circumstances for the better. So there is going to be an extensive document that would be published, hopefully by the end of the year, probably not, probably in the beginning of next year, on annual reviews and how debt counselors and career providers should assist in the conducting thereof. So we'd probably do a workshop on that as well, because it's very important for career providers to know of the process and be part of it. And you'll be invited accordingly when that time comes. And then we look at direct payments by consumers that do not use the PDAs. How do you deal with that? Do you receipt them properly, and do you reflect the payments properly? And then obviously we look at the paid up letter process, that you give the paid up letters on time and that they are correct and reflecting the correct information, which is sufficient to be accepted by the credit bureaus as paid up. Then section 3, which is the PDA and the payment section, very, very important sections for us, because this ties in with a whole bunch of other regulations and issues surrounding the PDAs. We cannot have unallocated funds lying around, due to incorrect references or incorrect account numbers or accounts that have been closed, or whatever the case might be. We want you as the credit provider to receive the money that you are entitled to. So, and that is why we look at the PDA and the payment sections very, very critically, to see that you at all times, as the credit provider, make sure that you can, you have an open channel to receive monies either from direct deposits of consumers, or from the PDAs themselves. So I think when you do have compliance monitoring from the accounting department, make sure that you look at that as well. And then we have some other questions as well. Do you receive money from unregistered PDAs? So I think just speak to the staff dealing with it. Tell them that there are only 4 PDAs that has been used. And if you find that monies are allocated to you from a supposedly PDA, please report that to us, or you report that to Leonie and she can just let me have it. We cannot have that. We exposed one about 8 months ago, and it caused absolute nightmares. It caused consumers to lose homes. It caused consumers to lose their vehicles. And we cannot have unregistered PDAs running around. And we look towards you to tell us and inform us, if you come across any of these. And then finally, under the sections, we look at refunds, like where accounts are paid in full and you receive an additional payment. What is your process surrounding that? Do you process it efficiently? And do you get that back to the debt counsellor or the consumer or the PDA for that matter, depending on what type of refund it is? Then section 4, and this normally takes the longest time when we are doing on-site, is additional information and general support from you. So we look at consumer transfers, how you deal with consumer transfers between debt counsellors. So you have this debt counsellor on record, another debt counsellor income on record because of whatever the reason is, how you deal with that. We look at sections within your business that require some training, and we make some recommendations surrounding that. And then there would be some general observations and challenges from your side, the credit provider's side, which we would record. We have a problem with this debt counsellor, or we have a problem with this process, or we have a problem with this PDA, or whatever. We look at those general observations and challenges that you have as a credit provider. We have a lot of experience here in the debt counselling department. If you put our experience together, I think it's 150 years or something. So we are in probably the best position to assist you, to deal with the problems and challenges that you have. We then take your general suggestions and your general trends that you picked up in the industry, and we go and we feed that into our software, and over time we use that to develop some artificial intelligence, in inverted commas, as to what's happening within the credit provider space, and more specifically within the microlending space. So I think always think of these questions that you would normally not think of when you see that that we are doing compliance monitoring on you. And it's very important that our registrants assist us with especially issues in the industry surrounding trends and so on, because we would not always be in a position to pick that up. And then the final section is section 5. There would be overall comments by the NCR monitoring officer, and you would receive confirmation that the assessment has been concluded. You get some general compliance rating and related feedback. There would be correspondence from us if there's full compliance or partial compliance. And if there were partial compliance, we'll give you directives on how your operations can be improved. And I think that's the whole thing at the end of the day. We just want everybody to be in a position to be able to do the job properly, get the notices out in time, accept the proposals where it falls within the rules, so that you can get your money as soon as possible, and the consumer can get back into being credit active. So, guys, that is all from me. I think it is the correct space to put the question on. So I'm going to stop sharing and I'm going to give back to you, Leonie. Thank you.
Thank you very much, everyone. Okay, so it was 3 very intense, presentations, and we are going to get to the question and answer session now. So it is almost impossible for us to answer all of these questions. What I am going to do is we are collating the questions to see, what we can answer today, what we can't answer today, and then we will also give you feedback on the questions that we cannot answer. So I think the first question I will ask Anna-Karin. I think it is, must I always collect both pay slips and bank statements for the affordability assessment, or just the bank statement will do? Because some small business employees don't always give employees pay slips, example, hair salons or small businesses. So do you have to collect a pay slip and a bank statement, or is a bank statement fine?
Thanks, Leonie. So I think this is a question that's been raised on numerous occasions, and I think that's why I touched on it in the presentation, that we know that Regulation 23.4 was set aside by the MFSA judgment, which specifically stated that you must get latest 3 months pay slips or bank statements showing the latest 3 months salary deposits. So that was set aside, and the NCR concedes that the regulation no longer stands. But if you look at section 81.2, read with regulation 55, which is still applicable to affordability assessments being conducted, it clearly states that a credit provider must not enter into a credit agreement before taking reasonable steps to assess, and then it lists what must be assessed: the proposed consumers' understanding, debt repayment history, existing financial means, prospects, and obligations. Then if you look at Regulation 55, it sets out what supporting documentation must be recorded. And that clearly states that you must record what was taken into consideration when conducting affordability in terms of Section 81. So if we conduct an investigation, and it can be proved that from the bank statements, the income was clearly visible, and then that would be sufficient. All that we require is that you provide us with all the documentation that's been taken into consideration. So if the income of 6,000 Rand was taken into consideration, you must be able to provide the inspectors with variable supporting documentation to show that it's been verified and it is indeed the correct income of the consumer that's been taken into consideration. So I think just have regard to Regulation 55, if you determine your internal processes that you follow, case law in the past, it was found that proof of income is salary advice. We look at the bank statements and it is for 3 months. So the Act is not clear in that it must be 3 months, but case law on that point is very clear. So should we refer to the tribunal, we will rely on previous case law. I also noted from the chat box that there was a question in relation to why we don't engage with registrants after investigation. So the answer to that is very simple. We advise registrants in the beginning of the investigation that this is the investigation. And your conditions of registration is clear, that you must partake in investigations and compliance checks when called upon to do so. So if you are subjected to investigation, and I think that's why I specifically mentioned that, registrants must please ensure that they provide all the supporting documentation. We're not going to engage with you again because the inspectors ask, provide me with the documentation that was used in support of this application. That includes your supporting documentation that you used for your affordability assessment, which must be aligned with Regulation 55 of the Act. So that is the proof of income, which is either salary advice or bank statements from which the income is clear.
Great answer. Thank you very much. And that provides a little bit more clarity as well. I think the next one is I want to go to you, Tammy. I want to ask you a question that's received. When do we need to cancel the debit order? after the 17.1 is received or the 17.2?
Thank you. Yeah, it's a simple answer. The 17.1 really does not mean anything in your life. It really means that the debt counselor wants to have your balance and to have a look at issues like prescription. Has the thing prescribed? Is it still due and payable? And what is the amount outstanding? Because they need to use that in conjunction with all the other COBs to create a proposal. Now, remember, after the 17.1, it's not necessarily a given that a consumer will be declared over-indebted. The debt counsellor could be receiving all the COBs and see, you know what, you just actually budgeting poorly. If you budget better, you don't need to go under debt review. And therefore, there is still a chance of a rejection of the debt review application after the 17.1. Because it's not necessarily that the consumer would be declared over-indebted. So the 17.1 would have nothing to do with the cancellation of the debit orders. It would be the 17.2. So once you've received the 17.2, it states that the consumer has been declared over-indebted and that the proposal that you receive is now going to start coming into effect. So it's only after 17.2. And also, like in my presentation, make sure that you look at it, that you're happy with the repayment. There is a whole section in the task team agreement that deals with the terms that cannot be exceeded, the reduction of the interest rates and so on. So if you use that as a base and you're happy that everything is in order, from there the debit order needs to be cancelled so that the proposal can start taking in effect. So 17.1 means nothing in the cancellation process. Your 17.2 is your sweet spot, if that answers your question.
Right. I think that's a great answer, because you know what, you get different answers from different people, and I think that's why we need the clarity of the regulator. So I want to touch on the certificates from the National Credit Regulator. We are seeing that we are trying to assist the NCR to complete and send the certificates to members as soon as possible. So in the chat box, I did provide you guys with a link that you can fill in. The information then comes immediately to me, and I talk to Zolile, and we're trying to sort out the certificate process as soon as possible. Usually the NCR's turnaround time with the association is 24 hours. So I will be able to provide you, if everything is paid and updated, within 24 hours, I can provide you with an answer. I think, Zolile, there's a question here, or anyone in the NCR that wants to answer this. What is the maximum amount a micro-lender can give in one day for a short-term unsecured loan? Is it 7,000 Rand plus the initiation fee, or is it 8,000 Rand plus the initiation fee? Anyone from the NCR can answer this.
Hi everyone. Yes, I think it's,
Yes.
Yes, it will be 8,000 Rand plus initiation fee.
Okay, great. 8,000 Rand plus the initiation fee. Perfect. So I think, the fact that that we are struggling a bit with the certificates, you can really send your questions about the certificates if you haven't received it to the association, and we will also take it up with the NCR, because I know that they are also overwhelmed with questions. Let's go to another debt counselling question. We find that we comply with the 17.1 and 17.2, but then the client does not go ahead with debt counselling arrangements. Now we have cancelled our debit orders, the debt counsellor has lost nothing, and we battle to find the clients again to pay his debt. This can be used by clients to not pay their debt, and we as the credit provider lose that money. So basically what they want to know, in an instance like this, what do they do?
Oh yeah, good question. I think it's important to note that you as a credit provider never lose your rights that you have under the credit agreement. So you would at all time be or have the right to collect the monies that is due to you, either through the debt review process or through a litigation process that you would have followed if the debt counselling was not there in any event. So we are aware that consumers are abusing the process. We are aware that there are debt counselling hopping, that you get multiple 17 ones and twos from different debt counsellors. But what we see that has really become the exception. With the tightening of debt counselling in general, and I think the understanding of debt counselling by credit providers specifically, that has been curbed to the most of the extent. But where you do receive that, you need to understand the termination process. And that is why in my presentation, I really stopped at that, because we found that especially the micro lenders do not understand the process. You need to terminate, and you can put a policy in place. If you do not receive court papers from the debt counsellor by day 61, you are entitled in terms of the Act to terminate your involvement in the termination process. And from there, you can start your soft hard collections or whatever the case might be. So as it would be the exception, it would not take away any of your rights that you would have had to litigation or soft collections, after the 60-day period. So I think put a policy in place, understand it, and use it. I think that would be the best way to mitigate any future losses because of this. Thanks. Yeah.
Great, thank you so much, Timmy. I think the next one is I'm going to give to Zolile. We noted this year that the renewal invoices were in some instances sent to outdated contact person email addresses, despite the registrants having updated their contact details. It appears that the database of the NCR is not aligned, as certain departments have the updated contact details and however other departments do not. So basically, what can we do to ensure that the NCR has the updated information? Who must they contact? Who can they send it to?
Thank you for that. Yes, I think in this quarter, what we normally ask the registrants must submit information to the registrations department, and there's emails to the registration website. There's registrations email address, which is registrations@ncr.org.co.za. Yes, the update, we do it immediately upon receipt of that information. Just that there's two systems. The invoices is done by our finance department. We had informed our finance department to also update on their side. I think they just somewhere we picked up later that some of the invoices some of the information was not updated. We subsequently rectified it at a later stage. Yes, that one we must apologize for this year. We picked up that it was also definitely from our side where there was some mishap. But it was just between the two departments where there was some mistake that could not be fixed. But going forward, that's what we were doing. We update as soon as possible.
Okay, great. Thank you very much. Then I also received a couple of questions about the third-party fees charged to a consumer for debit order processing. I think this is not the platform to discuss it, as I know that the case is being handled in the tribunal. There has been some developments on that, and I think we should look at what the tribunal says, when this matter are taken further. So those questions will not be dealt with at this stage. I think speak to your service provider and get the relevant and updated information from them as there is new updated information. Then the other question that I received is, Anna-Karina, I want to send it to you. So does the R1 million penalty in the tribunal go towards closing down the unregistered credit provider? So basically, do they deregister the credit provider and have to pay the R1 million, or is it only a deregistration?
Thanks, Leonie. So in instances where deregistration as well as the R1 million is ordered, it is both. So the credit provider will be deregistered and they'll have to pay the administrative penalty to the necessary fund as well.
Right. No, I think it's a good thing to know, that if you go to the tribunal, it is very difficult. So then the other thing that I would like to know is, it's another debt review question. What does a credit provider do once the debt review is complied with by the service provider, but the customer does not comply with the debt review company, and therefore the debt review company relinquishes responsibility with regards to the customer and the current debt review status. However, they do not remove the review status from the credit bureau, and we therefore cannot hand them over, or the service provider is then complained that the transaction is reloaded or the customer is handed over. So that is also a very loaded question, Timmy. If you can answer a part of it, that would be great.
Yeah, no problem. Again, nothing in debt review process will take away your rights under the credit agreement. I mean, it's your business. You loan out money to receive it back and make a profit. That is your business model, and there's nothing wrong with that. And you are entitled to receive the money that you have paid over to the consumer, loan to the consumer. And anything that falls outside of the process as defined in the debt counselling process would then give you your right to terminate your participation within the process, irrespective of what happened. And I'm talking if there's no payments, if you had a payment schedule that you can expect payment on a certain date and you do not get that payment, you can then decide to no longer participate in the process and terminate. That's the one thing. If a consumer then leaves a debt counsellor, the debt counsellor then withdraw, and I'm putting that in inverted commas, as a debt counsellor, the consumer still remains under debt counselling. Just because the debt counsellor says, listen, this guy is not cooperating with me, the process has been followed, the administrative decision to declare consumer over-indebted was made, and that consumer would then remain under debt review until such time as either all the debts are settled or a court has been approached to say that the consumer is not over-indebted. Whereafter the necessary processes will be updated, the debt help system of the National Credit Regulator will be updated, and the credit bureau is updated. But again, the question indicates to me that there is a general misconception surrounding termination, and maybe we should look at putting something together, you and me, Leonie, that simplifies terminations in terms of 8610 and in terms of 88.3. And clearly states that these are your rights, these are the actions you can take, and this is the time frames in such actions. And I think if we do that, and we can really easily explain it, it's a simple concept. It would help you as the credit provider to know when you can start, taking action and how you should be doing it. If that answers your question.
Yes, great. That's perfect. I see the questions are coming in, and guys, on the 18th of November, we have a membership session just focusing on debt counselling. We will have a good speaker there. I will also talk to Timmy beforehand to make sure that we answer these questions. So if we don't answer everything now, you can be sure that we will answer it in that session. I think the other question that I have, and I'm just going to put it to anyone from the NCR again, is specifically the calculation on the credit life matter. I have been receiving a lot of questions on how it should be calculated. I know in a previous session there was some confusion, but if we can just for once and for all just settle it again and give our members guidelines so that they can go and listen to this recording. And maybe Anna-Karine or Zolile, if you guys, any one of you would like to answer that question.
Sorry, Leonie. I think just for clarity on that, I'm not too sure exactly what guidance you need on the calculation, because I think the confusion existed on whether it must be calculated on a pro rata basis or not. And I think that's been clarified, that it will not be subjected to pro rata calculations.
Okay, great. I think that's the only clarity that is required at this stage. Okay. Guys, I think this was a very good session. We are receiving a lot of questions at this stage. I'm going to post a link now to please fill in the survey. We want to thank the NCR, Anna-Karine, Zolile, and Timmy for always being open to these sessions. We really want to thank you for your support, for your guidance. We will definitely be in contact again for some additional questions that we want answered. So Sunay will post the survey now. If you can please complete it as soon as possible, and don't log off, because we are going to do something interesting now in the next part of the session. But we are going to say goodbye to the NCR, to Zolile, Timmy, and to Anna-Karine. Thank you very much, everyone. Yes, so please fill in the survey. and then we will move on to the next part of the session. Thank you, Solile. Thank you, Tammy. Thank you, Anna-Karin.
Thank you,
Thank you.
everyone. Bye-bye.
Bye.
Thanks, guys. Go well. Go well.
Right, guys, like I said, we will have more information on the questions we've received. We really do appreciate all of the questions, and we will try to answer it. While filling in the survey, I want to say that ALPS is a proud sponsor of the MFSA's digital contact sessions, and we really want to thank them for their support. Then also, up next, while you are completing the survey, please have a look at this video.
Imagine a loan management system that's 100% cloud-based, fully integrated with multiple payment systems, credit bureaus, insurance providers, accounting systems, and virtually anything else through our smart integration platform. At QuinPay, possibilities are made possible. It's out with the hassle and in with the perks. So, what can we do for you? We make you look good. We believe in multiple touch points, therefore providing you with the ability to generate professional documents and communications that will ensure your corporate branding is consistent. We are a product-centric system. If you can think about it, QuinPay can manage it. We start with the simple stuff, getting the users to comply with your business rules, but regulatory compliance is important too. So we took care of it. Profitability is the name of the game. Reducing the administrative burden whilst increasing your collection rate and improving turnaround time at the same time lies central to our architecture. This, together with automation and the flexibility to adjust your offerings to meet those market demands quickly and efficiently, will certainly increase your profitability. We save you time. We have streamlined the processes, automated collections, disbursements, scoring, approvals, and comprehensive reporting. We save you money. No need to employ any additional IT infrastructure or staff. No need to worry about disaster recovery, backups, and monitoring, etc., as we have taken care of this. You can focus on taking care of your business while we take care of the rest. So, how do we do it? QuinPay is able to cater for a large range of products, giving you the flexibility to tailor your offerings. From basic account management, statements, audit trails, and compliance reporting to personalized business rules, we will tailor our product around your business needs. The QuinPay solution provides a single view of a client, making client management simple and efficient. We provide seamless integration with industry-leading service providers, providing you with the opportunity to scale your business. You provide the internet, and we will do the rest. Ready to make a difference in your finances? Let QuinPay make those plans a reality.
Great, thank you very much. Next, we have a presentation from Madeleine Engelbrecht from Universal Insurance Administrators. Guys, please stay on for this. Great, over to you, Madeleine. Madeleine, are you on mute? I see you are still on mute.
There we are.
Yeah.
Yeah, you can hear me. Great. Good morning, everybody. My name is Madeleine. I am the Sales Manager and Admin Assistant for Universal Insurance Administrators. For our presentation today, we'll start off with who we are, followed by some social media posts and where you can like and follow us. Then we'll have a look at one of our value-added products currently in the market, and then you will have the opportunity to meet our staff. So when you see them and engage with them, you'll have a better picture of them. And lastly, we'll have a look at the journey through the years with the MSA. We thank you for your time, and yeah, we'll hope that you will enjoy this. So I hope that you can see that. Can you see that screen, Leonie?
Yes, I can see it.
Fantastic. Okay, there we go.
Protect your business through innovative insurance products for the microfinance industry. Universal Insurance Administrators strive to safeguard you from risks associated with life and death by offering unique products that will protect your business as well as add to your income. As your business partner, we provide you with the necessary business support, training and resources so that you can retain and grow a loyal customer base. We have been market leaders in the microfinance industry since 2007, with our IT integrations and systems giving us the competitive edge. Hundreds of businesses depend on our products to reduce their risk. We have successfully processed and settled more than 20,000 claims. We offer the following great products: Credit Life, Beneficiary Plan, Single and Family Funeral Products, Insurance Administration Services, as well as IT Integration Development. Let's take a quick look at each. Credit Life is specifically designed to cover the borrower's outstanding debt and pays out to the credit provider up to 100,000 Rand per policyholder. The Beneficiary Plan is an optional death benefit that pays out to the policyholder's nominated beneficiary up to 60,000 Rand per policyholder. We offer a structured family funeral plan with a variety of cover options available for individuals and families, including children, as well as extended family members. Additional options include a grocery benefit and a bonus savings benefit option. Our insurance administration services include risk mitigation, claims administration, MFSA compliance, customized product development, maintaining insurer relationship, data management, and much more. Our IT services include system integrations through an API, client reporting via our app, and client management software. Protect your microfinance business. Don't wait until it's too late. Call us today.
Madeleine, I think you are again on mute.
Good day. My name is Frans Schütz. I'm the Managing Director of Universal Insurance Administrators. For the past 14 years, we've been serving the credit providers in the industry with unique products and services and mitigating your risk and also adding to your income. We've been building long-lasting relationships with more than 250 credit providers nationally, and we're constantly investing in expanding on that. We understand the industry, we understand your clients, and we know why they come to you for credit, to be able to afford the things that is important to them. Together we can take that support to the next level. How do we do that? By giving back to the community. Universal Insurance Administrators has decided to launch yet again a new value-added product for you as the credit provider. This will be a mobile app, and we call it UIA Assist. This is specifically designed for your clients that makes use of the UIA insurance products. For now, it will be launched on the Android platform with the Apple Store to follow soon. So what does this app do for your clients? It will basically have two features. One being an easy to use discount coupon feature that can save your client up to 500 Rand per month on any daily essentials at any Checkers ShopRite nationwide. The second feature will be a panic button feature, and they will get immediate expert response, doesn't matter where they are in South Africa. So this app has been designed with one core vision in mind, and that is to save money and to save lives. If you are an existing client of Universal Insurance Administrators, we've got great news for you. UIA have decided to give this UIA Assist app for the next 6 months free of charge, as well as the products to your clients, starting right now. There are 4 reasons why this app will be great for your business. Number 1, There will be no registration or software installations for you as the credit provider. UIA will basically manage this in the background with our software and report to you on a monthly basis. Your clients will easily see the value in this UIA Assist app. So by doing a payment on their loan and their insurance, they will automatically qualify for the UIA Assist app and for all the features involved there. Thirdly, any new clients will see the value in the offering that you have and will sign up with you. Lastly, your clients will see your company for what it is, one that gives back to the community, brand loyalty and trust. So what's the next step? You must simply tell your clients about the UIA Assist app and get them to download and use it. Again, Universal has made this easy for you. We've done marketing material in the form of flyers, pre-printed posters, pre-written SMSs and WhatsApps that can simply be sent out to your clients. This will help them with the registration of the app and how to use it. And by simply doing that, they can start enjoying the benefits of this app. We'll soon be sending the marketing material to our existing clients. If you are not a client of Universal Insurance Administrators yet, certainly the UIA Assist app will be a great reason for you to get in contact with us. So join Universal Insurance Administrators today and enjoy all the benefits of the apps, better service, better products, and doing what's right for the community. And that is giving back to the community.
Thank you, Leonie.
Okay, great. Is that everything you wanted to present, Madeleine?
Yes, that was definitely it. Thank you very much.
Great, thank you very much. Okay, up next, let's start with the fun stuff. Everyone likes money and everyone likes games. So let's begin with our first game, and you will win a 200 Rand voucher. So it's a pop quiz, a monkey puzzle. Let's start. Answer the question by choosing one of the answers provided. The first person to answer correctly in the chat box will be the winner. The winner must email admin@mfsa.net to redeem their mystery prize. Great. Which was the first film by Disney to be And who is the answer? It is Marisa H. Congratulations. You can send us an email at admin@mfsa.net, and the answer is Snow White and the Seven Dwarfs. Right. Next question. How many time zones are there in total in the world? Your answers. And the winner is, we are going to give it to you now. Give us a couple of minutes. There's so many answers.
Madeleine Engelbrecht.
Madeleine Engelbrecht. Congratulations, Madeleine. Very, very quick. Okay. 24 time zones. That's a lot. Industry pop quiz. Okay. Give the answer of each abbreviation. The first person to answer it correctly is the winner. And the winner, please email admin@mfsa.net. DCRS, what does it stand for? DCRS. It's got something to Debt Counseling Rule System. Great. Who was that? Avita, you are definitely the winner. Congratulations. Yes, you are the winner. Debt Counseling Rule System. Congratulations, Avita. Next question. DMA, what does that stand for? DMA. Well, there's a lot of abbreviations. So this one is actually very interesting because there may be more abbreviations than what we are referring to, but we are looking for a specific one. And I'm going to say it's more in the developmental space. Right. We have an answer and we have a winner.
Yes, Sunel.
Yes. So now, congratulations, Development Microfinance Association. That's the answer that we were looking for, but I think there's a lot of abbreviations. So congratulations. Okay. Up next, Pictionary. Guess the word associated with a picture. The first person to answer correctly in the chat box will be the winner. Winner, email admin@mfsa. What is the word? Right. Kirsten, who was the first person to answer?
Victoria.
Victoria, congratulations. The answer is Zoom. Well done. Next question. Guess the word. Gmail. Great. Kirsten, who was our first winner?
Sorry, let me just get there. First one is Onique.
Congratulations. Remember to email us at admin@mfsa.net. Next one. Guess the sound. I always struggle with this one. Guess the word associated with sound clip. First one in the chat box is the winner. please email admin@mfsa.net. Okay. I already saw some winners. Kirsten is our winner.
Victoria once again.
Well done, Victoria. You are going to make us bankrupt. You are very tuned into this. Great. It's going to
Kelebongile.
Well done, Kelebogile. It's an espresso, it's a coffee machine. Yeah, you know it's rich people that can identify with that if you have a coffee. Otherwise, it would have been a kettle boiling on my side. So next up, it's Guess Who. How it works is you have to guess who's displayed on the screen. You only have a few seconds to guess. Once again, in the chat box. Okay, let's go. Okay, so look at the face. It's one of our Howard Gabriel's. Avita, no. Congratulations. You know your boss too well. Well done, Avita. Up next. Who is this person? He's also a stakeholder in the payment systems. Ivan, you are very close. Ivan, I am thinking you are the closest. It's associated with PASA, definitely. And you know what? I'm going to accept your answer. Congratulations, Ivan. It is someone from PASA. It's Maurits Pretorius. Well done, Ivan. It's good that you recognize him. Guys, I think that is what we have for you today. We just once again want to thank our sponsors for their support. Akpas, Alps I, BidMe, Experian, Kepler, Quinpay, Micromax, Newpay and Delta, SureCard, Sure Systems, TransUnion, and Universal. Thank you so much for your support, everyone. We look forward to the session of the 18th, so make sure that you join us. Have a great day.